Welcome to Embedded Finance Review Podcast. My name is Lars Marco. In this episode, I'm speaking with Jarvey Moss, who is the founder of Saible. Saible targets the construction industry and offers some payment services. In this episode, we are speaking about the construction industry as a whole and what kind of tech and fintech stack they're using today. We touch on Saible's mission and how Jarvey sees the industry changing. And of course, I'm asking him the question whether Saible is vertical fintech or embedded finance. Let's dive in. Hey Jarvey, welcome to the podcast. How are you doing today, and in what part of the world are you actually located right now?
Morning, Lars. I am very well, thank you. And I am in Birmingham in the UK, not Birmingham in Alabama.
Great to have you on the show here and talk a lot, I guess, about the intersection or the topic of financial services, specifically for one industry. You have chosen the industry of construction services, starting in the UK, starting over there. Maybe to kick things off, obviously, here's an embedded finance podcast. Not everybody knows about every industry in very much detail. And now that I've looked at a lot of different industry, I think that one of the first questions I always have when looking at the new industry is how is the current setup when it comes to financial services? What is the biggest pain point? When you initially started reaching out to them, what did you realize was the biggest friction when it comes to money?
Yes, a good question. The pain point that we address at Saible is to do with the way that money flows through supply chains. And I think it's fair to say that the biggest pain point in the industry as a whole is around cash flow. The industry suffers from a very high insolvency rate due to very poor cash flow. And much of that is down to the way that the money moves through the supply chain. So we're addressing one of the biggest pain points in the industry.
And also maybe this is a good point to touch on that as well is, now I said construction industry. Maybe can you explain a little bit more? I mean, obviously, I guess everybody knows what the construction industry is, but maybe give us a bit of a primer as well. What does it mean when we talk about the construction industry? What kind of companies, what kind of stakeholders are in there? And perhaps whom did you decide to address specifically?
Well, the construction sector, as you say, everybody knows what construction means. We actually talk about construction and development projects. So our solution is to help with the financing of those two things. Development projects then includes things like major fit out and refurbishment projects. So you might see, at the moment, we're seeing a lot of office space being turned over into residential space, for example, in the UK particularly. Whereas construction tends to be much more traditionally, there's a muddy hole in the ground and out of that is going to come a bridge or a building or some other project of that nature. So we're actually across construction and development. Then that's split into private, publicly funded projects. Public sector is obviously all taxpayers' money coming through, but it's distributed through various means. Government departments, non-departmental agencies like National Highways here in the UK for building roads. You have infrastructure projects which have their own budget, things like HS2. I'm not going to say too much about that one. And then local authorities are spending money. There's Homes England, which is distributing money for housing associations. So it's quite fragmented even in the public sector. Then over in the private sector, there are as many different ways of financing construction projects as there are projects pretty much. But generally, there tends to be some debt involved. So there'll be a lender of some description. There's equity coming in from investors and from the developer of a project themselves. And then there's a supply chain, which on large projects tends to have at the top a main contractor or general contractor or prime contractor, as they're called in different jurisdictions. And then you have a supply chain beneath them of subcontractors and consultants, architects, engineers, all those sorts of people. So it's quite a complex ecosystem. And every construction or development project is genuinely unique.
And is there a way to answer this question? Is there a specific size of these businesses? I mean, are they typically very large corporations or rather very small companies, or a good mix of all of this?
It's an enormous range. You've got one person in a van all the way up to enormous global construction companies. And then above them, developers can be an individual person building a self-built house all the way through to massive house building. And then you've got commercial and industrial scale development going on as well. So it's a huge range. 99.1% of the businesses in the UK construction industry are SMEs. So there are very large businesses, but most of the businesses are SMEs.
And as you described in the previous answer, and I think also that's what we're going to talk about Saible and your offering in a bit more detail a little bit later, but basically the different layers is quite common, right? Where you have, let's maybe do a very practical example. Let's take a business commercial project where a new building with various offices is being built. There's like one company at the top, basically, who is in charge of all the operation. And then there, of course, like as we all can understand, when looking at a construction site, there's a lot of different companies, different expert profile for doing certain things in the value chain. But at the end of it, there's one big name at the very top who is in charge and is responsible for building this project, correct?
Yeah, as a rule, it's quite simple terminology you can use. You have a main contractor, and they're project managing the entire thing. And then beneath them, you have specialist subcontractors who do their expertise in one area that are brought in to do that. Some of those specialist subcontractors can be very large businesses, incidentally. And the way that the industry is structured, the main contractor tends to be an absorber of risk. So it's quite a high risk from a financial perspective, quite a high risk sector. And that risk is flowed down through the supply chain in ways that is not necessarily always particularly healthy.
Yeah, understood. And again, like looking at the companies, and maybe you mentioned already the majority of these providers are SMEs. Can you say something like what is their like general adoption of technology? I mean, looking at other industries and again, we, as an outside perspective, might think like, okay, this is how a construction company works. But is it fair to say that there is already like some sort of technology that they're using today, certain kind of like tools, SaaS services, or is it still very, let's say, technology?
There has been an explosion, I'd say, of construction technology in the last few years. I don't come from the construction sector or indeed from finance. Originally, I'm a technologist with a different background. But I am a member of a thing called the CTech Club, which is a group of international founders in the construction technology space. Construction industry has been seen as a bit of a laggard. Construction and agriculture, where they're always the two at the bottom of the adoption tables. But I think that picture is actually a bit misleading. There are a lot of construction technologies now, those sort of mind maps that they build of the different technology spaces. That's quite a cluttered mind map for construction. And there are some really clever bits of tech out there that are being used on site today.
But do you think there's a specific reason why all of this is happening? You said the last couple of years, the number of providers exploding quite a bit. Perhaps the easy explanation would be, okay, all the other industries are done or like too many providers. So you're going to come to the ones who are a little bit harder to disrupt with technology. Or is there anything else specifically in the market that you have seen changing, that there's now a higher adoption of such services?
I think overall, just what you've said, I think other sectors are pretty saturated. It's quite difficult to come up with a game-changing technology now, whereas construction was really open to that. A lot of the businesses are started by people from within the sector who've identified a need for what they do. In our case, there aren't many businesses who are focused on the payment part of the industry. It's still really, you can count them on the fingers of two hands, more or less. So that's the one bit that's still a little bit underserved. That's not actually why we targeted it. It was a completely different reason that we came into it, but that is what we've noticed.
And we have seen it in other industries, also specifically here in the podcast, that it's quite common in some industries that there is maybe one or a couple of providers who offer like an industry niche ERP service, which is quite common to use. Maybe not even the most technology advanced solution, but maybe even an old school provider. Is there something like this also in the construction industry? Because very often when I talk to new startups entering a specific industry, they always tell me, oh yeah, there's this one provider that everybody uses and you have to figure out if you want to replace them or integrate with them. Does something like this also happen or is available or existing already in the construction industry?
Yes, Oracle ERP very widely used, and also Coins is a construction industry specific, and that has a sort of ERP component to it. The other big global player, which isn't directly in the payment space, but is across the industry and across the life cycle of the project, is Procore. They're even advertising on the tube now, which I think is interesting.
That's kind of a development, right? I remember the first images on Twitter and LinkedIn when the first fintech companies were advertising on the tube. That was also quite much.
Well, you can understand why fintechs advertise on the tube. I'm not sure what Procore's doing advertising on the tube, but I'm sure they've thought about it and they have a good reason.
Yeah, that's what we call it brand building. I think we have now understood quite well how the industry is set up as a whole, how the technology stack is. Obviously here now in the Embedded Finance Trivia podcast, we want to talk a lot about like financial services. So we're going to talk now about like the financial side of the construction industry. And you touched a little bit already on what you're doing with Saible. So maybe we can do a little bit of more closer look at what your offering is. And then in the questions afterwards, also dive a little bit more how the construction industry thinks about these solutions and where this heads. But maybe a quick elevator pitch about Saible and what you're offering.
Okay, yes. I will make it as short and an elevator ride as possible. I do get carried away on this bit though, of course. The problem that we identified and which is widely recognized in the construction sector, is that because you have a tiered supply chain, money moves through that supply chain in a serial fashion from the top to the bottom. So the client and their lender are at the top of that supply chain. They pay a main contractor. The main contractor pays their subcontractors. They pay their subcontractors, and so on all the way down. And there can be many tiers in that supply chain. And that causes a problem because the money for all of those businesses lower down that pyramid is going through the bank accounts of the businesses at the top. And it does so effectively as cash, because cash is fungible. Once it's in a bank account, it can be used for any purpose that the holder decides they want to use it for. And that generally is to cash flow their business, pay bills on other projects, all sorts of things that they shouldn't really be doing because that cash is actually owed to other people further down. So you tend to get very long and compounding payment terms as you go down the supply chain, particularly at the very top to the couple of tiers beneath them. And this causes a whole load of problems, as you can imagine, because the people below down are effectively providing free credit to the people at the top. But when you combine that with the highest insolvency rate of any sector of the economy, which construction has, then you create this sort of perfect storm where businesses are holding on to cash. It's all about cash flow management. And then there's a very high risk that business is going to go bust. And when it, or if it does, that cash disappears. So you have a client who's paying on a monthly cycle, generally on 30 days, to a contractor. But that money isn't reaching the people who've actually done the work for which that money has been paid. And then if they go bust at the top, the supply chain beneath them can be unpaid for 3 or 4 months easily of their work. And so very often you get cascades of insolvencies when a business goes bust. We've just seen it in September here in the UK. ISG were one of the biggest contractors in the UK, the biggest main contractors in the UK, around about 2 billion turnover. And they went into administration in September, owing something like £700 million to their supply chain. And there are cascading insolvencies going on today because of that. What we do at Saible to address this problem is for every project, we open its own dedicated bank account, which has a legal trust around it that ring fences the funds. And then our technology allows the supply chain to authorize payments to each other exactly like they do today. But that allows us then to calculate how much of that total pot that's sitting in that project account should be distributed to each of those individual businesses. So we then pay them all in parallel. So we've turned a serial flow of funds into a parallel flow of funds.
Understood. And I guess specifically how you describe the problem from an outsider's perspective, or maybe even more from a perspective from some of the companies who are at the lower part of this triangle, makes a lot of sense. What I wonder is how is the company at the very top or rather closer to the top thinking about this? Because the way you described it right now, I have a hard time understanding like what is their benefits now with a new structure. I'm not saying that they would not be open, but you all know change is complicated. And if there's not a very selfish driver for one to do something, then it's sometimes hard to do that. So how is that playing out for, let's say, for the main contractors?
Well, you're absolutely right. We identified that problem pretty early on as we were learning about the sector on the way into this business. I mean, in short, first of all, the main contractor is not our customer. Main contractors won't voluntarily choose a system which is not in their short-term commercial interest, even if it's actually in their long-term commercial interest. because the nature of the industry is they're generally, not all main contractors, a lot of main contractors are basically firefighting, and their business model is all about growth of turnover so that you've got that cash washing through the system, even if you're operating as they generally are on sub 3% profit margins. So it's a very brittle system, but very difficult for them to change because they're competing with other main contractors who are using that cash flow to drive their business rather than making margin on the work that they do. So we address that in a couple of ways. First of all, as I say, the main contractor is not our customer. The client, the developer, is our customer. They pay for our system and they mandate it down into the supply chain. And that creates a level playing field for the main contractors then.
So for somebody like me who doesn't understand much about the construction industry, that's basically like the party who's financing, who wants to build the business commercial complex in our previous example. They see the benefits for perhaps themselves because they can maybe, I guess one of the challenges as well is from when you want to finance, I don't know, a 10 million pound or euro complex, you obviously don't give the whole money at the very beginning, you give it in parts. And obviously that's also connected with a couple of challenges. So obviously if you strip away, maybe it doesn't sound too negative, but like strip away a little bit of the flexibility of the main contractor and set it up in a framework where money is more like distributed based on, let's say, rules and engagement, it's probably also reducing some of the risk for this entity who's building the property at the end of it.
It does. It's very much about, we are fundamentally a risk mitigation service. That is what we offer. I think the easiest way to think about it actually is, rather than thinking about huge construction projects, if you think about it in terms of a domestic project, this isn't our market at all. And I assumed naively coming into the sector that the way that my kitchen extension would be funded would be completely different to the way that a skyscraper is built. But actually, it turns out they're pretty similar. So if you imagine, if you're going to, let's take a kitchen extension as an example, you would go to the bank and you'd borrow some money from the bank and say, I want to use it to extend my kitchen, please. And they'll look at your credit rating and say, okay, yeah, sure. So the bank is the lender. And in that situation, you, the householder, are the developer. You would then find a local builder. And that local builder is the main contractor in our example. That local builder would probably have a plumber and electrician who are self-employed, but that they work with regularly. That plumber and electrician are then subcontractors. And let's say the plumber has a labourer working for them. That labourer is then a subcontractor again. That is exactly the same setup as is used on most large construction projects. And again, the bank would pay the money into your bank account, and then they have to just assume that you're going to spend it on your kitchen extension and you're not going to blow it on a new car or some other thing that you haven't agreed with them. And that's because the asset that they've secured it against is your house or whatever you've put up as collateral effectively. Then you pay the builder, who usually puts a margin on, and then they're going to pay the plumber and the electrician. But you don't actually know whether they've paid the plumber or the electrician like they've said they have. And then the plumber might be paying his labourer separately. Again, you've got no idea whether they've actually paid that labourer until the labourer comes to you and tells you, well, I haven't been paid. And then you go, oh, talk to the plumber. And the plumber says, oh, no, well, I haven't been paid either. So then you go and talk to the builder, and the builder says, oh, well, the thing is, you paid me for the kitchen extension, but I was also working on a loft conversion and I had to pay everyone on that. So I've spent all your money. But don't worry, because I've got another loft conversion on the other street and hopefully they're going to pay me and then I'll pay your bills. It's exactly the same dynamic.
And if we were, obviously this is perhaps not the kind of project that you're going after with Saible, but let's assume now this would be a project where Saible is being used. How would that be different now? You described already there would be like one, let's say, project account, and perhaps the bank in that example would, let's pay in the, I don't know, £50,000 or something like this into this account. And then how would then the distribution work? I mean, very, very quickly, just I think it's quite interesting though, touching on that, how would then the flow between the different accounts for the plumber and the labourer work?
That's right, yes. We're on commercial projects, so we wouldn't get involved with the domestic, but the logic's the same. So in that situation, Saible would open a Laz's kitchen extension bank account, and the bank would put the money into that account. It wouldn't go into your personal account. You would put also into that account whatever you've agreed is your share of that cost, your equity stake. And you might not put all of that money in up front, as you said. So you've probably got a staged agreement with the builder that you're going to pay on certain milestones being met. And actually, you could draw down your loan from the bank accordingly, because if you draw down the whole lot at the start, you're going to have to pay interest on it from the start. So you'll draw down when you need the money from the bank. You'll add in your equity, usually up front, because that's cheaper for you. And then the builder will be paid from there. So that money would go into the Saible bank account, where it's then protected by a legal trust, which means you can't take the money back out again. The builder, you, the plumber, the electrician, and the labourer would all be using the Saible technology to agree between each other how much they're owed for a given payment period. Now, on big construction projects, there's a whole valuation process that goes on to get to those figures, but eventually you get what's called a payment certificate, and that tells you how much has legally been agreed for this period. Once you know what's on that payment certificate, you put the relevant numbers into Saible. There are 4 numbers. You put them in, and everybody's doing that all the way down to the labourer at the bottom. Provided the numbers match going up that chain, then the money can be released from the Saible account directly into the bank accounts of the plumber, the electrician, the builder, and that labourer at the bottom of the supply chain.
And is there, I mean, again, not in the example of my kitchen as extension, but perhaps in bigger projects, is that typically working then quite smoothly? What happens if these numbers like don't add up? Is there like a mitigation process or helping to resolve it in some way?
There is a separate space around cost and contract management where payment applications, variations, basically arguing. There are lots of different processes that different projects use to do that. We are not a payment application technology. There are good technologies in that space, Constructly, Pay Apps. There are lots of people who help you deal with contract management. There are specialists to deal with disputes and conflict resolution, all sorts of things that go on. But at the end of all of that, what comes out is a number that has been paid. Whether or not everyone's happy with it, it is still agreed legally. And we're only involved at that point because we're very much a payments business, deliberately by design. So it's only after all the arguing that you come across to Saible, and then you put in the details as if you were going into online banking and entering them. You're entering a payment.
Makes sense. And you touched also on your background that you are like not from the construction industry, but also not from the financial service industry. Now you picked on a topic which is obviously very heavy on payments. Quite keen to understand, how did you solve this challenge of like offering this payment product? Did you build it yourself? Are you partnering someone in the background?
We developed and designed the system alongside specialist lenders, developers, professionals from the sector. So we got a lot of input into the design process. Because I'm not an expert on the sector, I know enough to be dangerous now, but when I started, I really didn't know the first thing about it. So we got lots and lots of help to make sure that what we were doing was fit for purpose. We built prototypes, had them tested by people and so on. And we're just going to market at the moment. And the way that we're going to market, I think the construction industry may not be of interest to Embedded Finance podcast listeners and viewers, but the way we're going to market, I think, is probably quite interesting. We've started with what we call manual payments. And we're working there with a UK licensed bank called Alaka, which is a relatively new bank. They provide regular bank accounts. They do all of the regulated activities around the know your business and know your customer checks and anti-money laundering, all those sorts of things. So it's just a bank account. And actually you can use any bank, any licensed bank to open that account. But we just recommend Alaka because their customer service and speed is appropriate for what we do. And they provide then a third-party mandate to us so that we can make payments on behalf of our client from that account. And then our technology sits separate, and that's just used by everybody on the project so that we can calculate what those payments should be. And once the payment is made, then our tech spits out a remittance statement to everyone who's been paid so that they understand the breakdown of where their money went and why they got what they got. The next step for us, once that's up and running, is to move to a digital payment solution. And in that situation, once you're onboarded by Saible, so we have done all of the necessary checks, then you will be able to open a bank account for a project inside the Saible app at the touch of a button.
The first version that you described is basically an MVP, something that allows you to offer, maybe start first projects rather quickly without the, let's say, higher investment on technology. And now basically the second phase would be where you don't need to do like the manual account opening and have, let's say, a normal bank partner, but more like the usual infrastructure player in the background who gives a lot more flexibility, and probably the scale is only possible with that second setup.
That's exactly right. You'll get the digital opening of the account, but also the payments themselves. Once you've provided that authority inside the account, those payments will also just be made automatically. And for that, we're using Griffin, which is a UK fintech sort of infrastructure bank. So it's fully licensed, it's a proper bank, but their business model is around enabling businesses like ours, whereas a conventional bank obviously has a very different model where it's about servicing customers direct.
And I understood correctly, basically there's one bank account that Griffin now, in this model that Griffin creates for each project, so to say. And laborer, the plumber, or the electrician, the previous example, they don't have a Griffin account, right? They still use their normal outside account. But basically what happens when they log in and everybody agrees on a certain number or a certain milestone achievement, then basically the money from this main bank account gets transferred outside of the ecosystem into their account, which they might have with, I don't know, HSBC, NatWest, or whatever.
Precisely. We've designed the system to the best of our ability to allow everybody to carry on doing everything that they currently do. The only difference for most users of our system is that instead of inputting a number into online banking, they put a different number into Saible, but the outcome in the end is the same, that you get paid. It's just you get paid much more quickly, and where the cash has gone is going to be different.
Yeah. But maybe we don't speak about only like how it is as a service today with Saible, but maybe also in the future. Does it mean that these different stakeholders only access Saible in those moments when it's about like a certain milestone is reached? Is there, again, maybe not today, but maybe in the future, any other kind of functionalities or features that you see are a must-have inside the offering?
The core proposition is what I've just described. And actually, we call it the inverse TikTok metric. So most apps are trying to increase the time you spend in the app. And our metric is the exact opposite of that. We want you to spend as little time as possible in Saible, because you should be spending that time building things generally. So our core proposition remains as is. Now, as and when that is complete, we should have our digital payments by Q2 of next year. And the manual payments is live now. We already have projects using it. Once we've got that, then there are a whole bunch of interesting things which do actually get much more into the conventional embedded finance space that we might explore. But our goal is to ask our users at that point what they need in addition to that core service. So, for example, it's very difficult for SMEs in the construction sector to access credit. So could we help with that? Maybe. But do we want to be primarily a business that lends money to SME construction businesses? No. We have a very clear mission around improving that payment culture, and everything else follows on. There's a lot could be done in the insurance space once you get collaborative payments up and running. You can look at integrated project insurance, for example. Are we going to be an insurance business? We might have some work in that space, but that is not our primary goal.
Understood. So if you were, I don't know, pitching Saible to an investor in a very early phase, or explain it even to a family member, well, how would you describe Saible? Is Saible a fintech company? Is it a vertical SaaS with fintech features? Obviously, as you probably all know, the listeners as well, there's around embedded finance of discussion. Is this embedded finance or not? Obviously, now we heard a bit about the industry and about what services you offer. How would you as a founder see Saible?
One of the things I really like about this business compared to my previous one particularly is that my dad understands what I do now, which is great. And our previous business was in a very large niche, but very complicated to understand. So I like the fact that people can understand what we do. I think we are a classic fintech, actually, in as much as we've taken all of the tools and infrastructure that fintech revolution has developed, and we've applied them to a particular vertical to solve a very specific problem. I'm pretty clear that we're not an embedded finance play, certainly not as I understand it. But I do think we're a fintech for the construction industry. You could take our technology and use it in software contracting or any other industry where you have a long supply chain. That's not our plan. Our plan is to solve the problem for construction, but we are a fintech, I'd say.
I personally love to hear that you, I mean, this is obviously an embedded finance podcast, so maybe it sounds weird that the host says, like, I love that you don't describe yourself as embedded finance, but as fintech. I think the statement I love to hear that is that, of course, very often you have this like interest from some people to call themselves embedded finance, even though probably most people would disagree it's not really embedded finance. And actually, we spoke about that even the first time we chatted when I invited you to the podcast, where you said already, like, look, Lars, I'm happy to come on the podcast, but I'm not really embedded finance. Whereas I'm like, yeah, Jarvey, I agree. You're definitely not embedded finance. But I think what's interesting about embedded finance at its core is connecting something which is happening in the financial world with the outside of the financial world, right? And while clearly Saible is a pure fintech, and you also described that they're not really features, functionalities that are non-financial today inside your offering, there's still obviously a very hard connection to what's happening outside, right? And the outside for you is actually very specific. It's a construction that's happening. There's certain progress being made, and there's a lot of challenges while transferring what is happening in the actual building right now on the construction side to the payment side, right? And that's basically what you're solving. And I guess all of us also in the embedded finance industry agree it doesn't always need to be embedded finance solution. What really matters is like addressing the pain points and finding a solution. And we have seen, not in construction, but in many other industries as well, where companies start with a financial and then for non-financial offering and have a very different plan later on. But obviously, at the very beginning, you need to address something which helps you to get to step 1, 2, 3, 4, 5 before you can build the very big mindset. But coming maybe back to Saible and where you see the company developing at the moment, of course, it's still this phase 1 where you work with your bank partner and let's say in a more traditional bank account setup before you move to the phase 2 where all of it will be scalable. You plan to address the British market for the time being. Is there also a plan to go outside? Is there a plan, or is maybe expansion to other countries less interesting and there might be even other industries within your home market that maybe act similar to construction where you can also apply these services? Where do you see Saible growing?
Yeah, those are really good questions. I think questions that any founder should be asking themselves pretty regularly. We expect to expand internationally as quickly as we feasibly can. Technically, what our technology does works for any market which has the characteristics that I've described. But the regulatory framework, the way that the accounts can be set up, the wrappers around them, the way that you're allowed to move money, the checks that you need to do, and so on, will vary from jurisdiction to jurisdiction. So yes, we expect to move as quickly as we can to international expansion. I think it's probably going to be ex-Commonwealth. And actually, we've got some reasonable links into Germany as well. So we may find ourselves speaking to you again from that perspective. But to be honest, we're so focused at the moment on the near horizon, which is just making sure that we get the UK market up and running properly. I don't worry too much about what follows. If we get that problem solved here, then we have a new set of problems to solve elsewhere and we'll deal with them at the time. And you're right, it's also possible that we move horizontally into adjacent verticals. I don't know yet. I think international is more likely, but I don't know.
Very early to say, I guess. Jarvey, I learned a lot. Is there anything we missed from looking at our questions? Is there anything that you want to add for our listeners? I mean, I find it very interesting when people who don't have a background in financial services, in your case, like not even construction, kind of identify this problem, go in. They're always, and I had this podcast previously as well with the founder of Nelly here in Germany who addresses the medical space, who said like actually it was their advantage that nobody came from the space, because very often when you come from a specific space, you also have this typical like blindness to certain things and cannot be as naive as you need to be sometimes as a founder to challenge things. So I find it quite inspiring that you chose specifically this industry, this vertical to go after.
Actually, I'll probably finish with the thing that I often start with. Exactly on that note, why on earth does somebody with no background in this sector decide that, and in fact, either of the sectors, because we're an intersection between payments and construction, why would you choose that? And the reason for me was really simple, actually. As I exited my previous business, I was trying to find something I could do that had societal impact. And I started looking at renewable energy. I thought perhaps I can work in that area. And through that, I met people who built wind farms and solar farms. And through that, ended up meeting people who built houses and more conventional stuff. And one of them told me a story about the consequences, the personal consequences for somebody they knew of an insolvency in a supply chain and what it did to this small family business. And I've just put something on LinkedIn because ISG has just gone bust. This is happening right now. 18 construction businesses go bust every working day in the UK, and most of them are family-owned SMEs. So it's really traumatic for the people involved. The industry's got a terrible mental health record, elevated suicide rate. So for me, coming into it, once I realized that this was a big commercial problem in a large sector, and that if we could solve it, we were going to make life better for tens of thousands of people, I was hooked, and I had to do this. And it makes actually for us recruitment and talking to people, we haven't had to make up a purpose for our business. We have a very clear purpose. It's at the center of what we do. Our mission is to change the payment culture in the construction sector.
Very, very inspiring. Thanks, Jarvey, for sharing all your insights. If there's somebody out there who wants to pick you up on something that you said, is there a way to get in touch with you?
Yeah, absolutely. I'm on LinkedIn. I've got quite an unusual name, so I'm easy to find. Jarvey Moss, Saible.co.uk as well.
Amazing. Again, thank you. And until next time.
Thanks very much for the invitation, Lars.
Thank you for listening. For more episodes and our weekly newsletter, please visit embeddedfinancereview.com. And if you have an interesting embedded finance story to tell, please reach out. Until next time.